Welcome to a new series. It's called the Commodity Supercycle. And today I'm very honored having Lawrence Leppard on my show. Lawrence, how are you today?
I'm very fine, Mark. Thanks for having me on your show. I know you have a large audience.
Yeah, it's the first time you're on a German speaking channel, actually. So I'm flattered as well. And yeah, introduce yourself to our audience, please.
Sure. So I live in the United States. I'm just outside of Boston. I manage a fund called Equity Management Associates. We are precious metals and sound money advocates and have been since 2008. The earlier part of my career, I was in the venture capital business, investing in technology companies, participated a great deal in the internet and the growth of the internet. Kind of retired, and then 2008 happened, and I thought, oh, this is a problem. Maybe all this money I've accumulated isn't going to hold its value. And as the government started printing money like crazy, so I quickly pivoted. I'd always been an Austrian economist. I'd always been a buyer of gold and silver in the past. I understood the errors within the fiat system, but they became very acute in 2008. And so I entered the gold and silver mining business in terms of investing in stocks, gold and silver mining stocks. And since then, I've persisted with that through all the ups and downs. It worked great for a while, as everyone who's in the area knows. Pretty dreadful from 2011 to 2015, but I stuck with it. Somewhere along the line, I figured out that Bitcoin was working and presented a pretty interesting alternative. Kind of reminds me of the internet. And so I've got a fund with about $70 million assets under management. And I pick good gold stocks, good silver stocks, and to some degree, good internet stocks, good Bitcoin stocks, and I have a little bit of Bitcoin in the fund. But I'm primarily gold. I have not abandoned gold because I think it's really the core of the whole financial system. It's still at the top of the pyramid. I think Bitcoin's a very interesting experiment, though, and it's going to become more and more important over time. So.
Yeah, what I like about you, I follow you for quite a while on Twitter, actually. I think when you started, it was like 5 or 10,000 follower. Now you're around 40,000. And I always like your style, your honesty. You speak out what you think. And yeah, you're definitely
I get in trouble for that. My wife tells me to shut up.
Yeah, I know that. Same here.
I definitely call them as I see them, and I'm not hesitant to say I don't have any love for the central planners and the central bankers. I mean, I think what they've done is just terrible.
Yeah,
the world's in a hell of a mess, and I think they're to blame. And
definitely,
you know what I'm working towards. I mean, I'm in this to invest my clients' money and make money. But what I really care about for my kids, my grandkids, is fixing the monetary system. I mean, it's so badly broken, and it is the fundamental root cause, in my opinion. It's the fundamental root cause of so many problems in society, and so.
Everything.
I think all of us who are fighting, the sound money battle, I think it's a very worthwhile battle, and I think we should pat ourselves on the back because I think we'll be on the right side of history longer term. Shorter term, as we all know, boy, there are lots of, you take lots of blows, right? I mean, this is not an easy fight, and it never has been, but it'll get easier, I think, because I think we are winning. So
yeah, definitely. Money rules the world, and you have it on your Twitter handle. It says, "Fix the money, fix the world," and this is so correct because everything bad comes out of the central planning banks, from the ECB, the Fed, and they made so much mistakes, and we all have to pay for it. Inflation, inequality, poverty, wars even. And it's so important to understand how money works, how money gets created, how they can create money out of thin air, and what they are doing. And it's for me, it's socialism, actually. It's a planned economy, it's communism, and they destroy everything. And that's why I like this fix the money, fix the world. So we're both advocates of sound money. So what do you think is the most important thing that people understand about the monetary system right now so we can fix it?
Well, I think most of your listeners will already know this. So I'm kind of preaching to the converted, but the fiat money system where people can create money or digital credits really is what I call it, with a click of a key, a computer key. I mean, it's immoral. I mean, it's a counterfeiting mechanism, and it allows people who are closer to the source of the money to benefit, otherwise known as the cotillion effect. And to the French financier who took advantage of it when John Law ran his experiment, which, by the way, is very similar to the experiment we're running. And if you can print money, the people who have access to the early money get advantages, and that's why you have Wall Street and billionaires and others who are able to borrow at 0% interest or very close to 0% interest and then buy things that provide a real yield. That's why they're billionaires and the rest of us aren't. And, you know, as you can see, if you look at any of the charts, you study history, you look at everything that's happened since 1971 when the US went off of the semi-gold standard, because it really wasn't even a gold standard then. You know, US citizens couldn't own it, but at least at an international level, there was a gold standard. You know, you can just see that the average working man has suffered and that the top has done very, very well. And this is why we've got the wealth inequality. And to me, it's not just a monetary issue, it's a moral issue.
Yeah.
You know, if you're going to lie about the money, then it implies that lying is okay. And so you've got the people running the governments, running the economies, lying about the money, and then they expect the rest of us to live with it. And it's just not right. And it leads to, you know, amoral outcomes all throughout society. And, you know, when we fix that base layer of society, I think things will get much better at a lot of other layers as well. But the misallocation that's occurred, the wars that have occurred, I mean, it's been quite bad. And, you know, but we're in the process of fixing it. I mean, the good news is that the system, their system, has an inherent flaw, and it's now being, you know, observed, and which is that they keep the swings get shorter and shorter, and the amplitude gets larger and larger, and eventually it's going to blow up. You know, they're going to have a hyperinflationary event here at a world level. You know, when, it's unclear, but it's coming. You can feel it coming. I mean, 2008 was the first quake, and COVID was the second, and you know, they're trying to put it all back into the bottle right now. I don't think they're going to succeed much longer, but you know, they've succeeded longer than I would have thought. And I'm just writing my second quarter letter. You know, and I'm kind of amazed. I'm kind of amazed that, you know, the stock market's hitting record highs, and they've managed to convince everybody that inflation is transitory. There's a study here in the United States that showed that 70% of money managers, investment managers, believe the Fed's narrative that the inflation is transitory. 70%, right? I mean, this is crazy. You know, all of us who are in the sound money camp know that they're lying, and know that, you know, this inflation will not be transitory, that it's going to go on and become quite persistent. Yet, you know, the average person is on the wrong side of the trade. And so, you know, we sit and we wait until they become aware of what we're aware of, and then ultimately we'll be very much on the right side of the trade. And we have been on the right side of the trade. I mean, you know, our results, most people in this area, our results have been pretty good for the last 3 or 4 years. You know, this year I'm kind of flat because, you know, we haven't gotten the next leg up yet in the gold price. Gold seems to be kind of trapped between this 1,700 and 2,000. My suspicion is that when we take out 2,000, 2,050, which is the high from last summer, you know, it's going to take off like a rocket. I mean, it's, you know, FOMO is going to kick in, and it's going to, you know, and then the other side is going to have a serious problem, you know, and they deserve it, frankly.
They created the mess, actually. You know?
They created it. That's right. That's right. And they'll come up with some other solution, but it won't work either, right?
I think we are in the end game. Definitely, we're in a late stage of the cycle, of the super debt cycle, money printing cycle, and we just see like they try to keep this insolvency alive. And I think very important for the people is to understand, because they always say, hyperinflation will never happen. But if you compare the fiat currencies against gold, against real assets, against Bitcoin, we already are in hyperinflation. We lost 99.99% of our purchasing power against Bitcoin the last couple of years, actually. And the same with gold, you know, over 90%. Even if you had the hardest currency in the world, it was the Swiss franc. In the last 10 years, you lost like 75% against gold. So still, you lose your purchasing power. So you made a really interesting tweet today. It said, it's a rumor, but it said that next week on July 13th, the CPI will be in the high double-digit area. So what do you think? Is it?
I don't know if that's true or not. I mean, I know the guy who retweeted it, Cliff High, and he's actually a credible guy. He got it from some source he claims was an insider at the Bureau of Labor Statistics. I just don't know. I mean, but let me say that I do strongly believe that the theme of the tweet is correct.
Exactly.
And that is that we will be surprised by the inflation numbers on a going forward basis. they will get larger and larger. And the reason is that they have to. And the reason is that that's what we're observing here, at least in the United States and around the world. But I look more carefully at the United States. That's where I live. And, you know, container prices, wage prices,
Everything.
you name it, they're all just going up. I mean, even you know, the May, I was just writing about it in my letter, the May CPI print was 5% in the United States at the top level, not the core. But, you know, I looked at that, a third of that is housing, and they were claiming that the housing and equivalent rent went up like 2% or something. And in fact, year-on-year housing prices in the United States are up 23% year over year. Yeah. So how you've got a 23% housing price increase, and they've managed to create the CPI statistic, which is really just a fabrication that shows a 2%, you know, increase on a third of the CPI. I mean, it's just a blatant lie. So, you know, in my view, what's going to happen here is the Fed is going to continue to say inflation is transitory. We've got it under control, or to the degree it's running hot, it's going to come back down. But I don't know, you know, how much your German audience saw this, but in the United States, when the Iraq War took place, there was this guy named Baghdad Bob. Do you remember him? He was the guy in Iraq who was the defense minister who basically said they were winning the war.
Yeah, I know.
Over and over again. And so he kind of became a great metaphor for somebody who's just blatantly lying. And I think the Federal Reserve is going to end up looking like Baghdad Bob if they don't accept that there's real inflation here at some point. Now, when that happens, then what do? I don't know. I mean, I think they're going to have a real problem. They could do wage and price controls like Ford did. You know, they could, there are a lot of things they can do, but you know, we'll have to wait and see. I mean, it's going to become an issue, and their hand is going to get shoved, because right now they've managed to put Bitcoin back in the bottle. I don't think they've managed to do it. Bitcoin just had one of its normal corrections. And I think they've managed to keep gold in the bottle, which, you know, that they have a big role in, because the BIS and others, you know, sell the gold, the paper gold. But what you see is that the takeoff of the physical gold has gone up between 200% and 500% since COVID broke out. Yeah. And so, you know, this is going to be like when the French showed up and asked Nixon for their gold. I mean, you know, the paper, they're going to keep printing paper. Yeah. But at the end of the day, a lot of people now know that there's nothing like physical, and they're taking delivery of physical, and we're going to drain them, and they're going to run out of, and they can't print physical. So eventually the gold price is going to get through this 2050 that it was at last summer. The last time it was close to that was in 2011 when it was at 1900. And so now you've got a double top breakout. Well, every technician knows what that means, right? I mean, we're going to go at least where it started on this last run. It went from 1,050 to 1,900. So, you know, okay, let's add $850 to the breakout point. So the next run, in my view, is probably up to 2,750. And, you know, 2,750, and the Fed's going to know they've got a real problem. And then FOMO is going to kick in. And then the other beautiful thing that's going to happen is, you know, this is just a tiny market. I mean, if you take the entire tradable gold, maybe it's $3 trillion. You know, I mean, there's an $11 trillion gold market, but a lot of that's jewelry and antiquities and so forth. You know, maybe the tradable market's $3 trillion. There's $400 trillion of financial assets in the world. You know, there's only 700 billion of Bitcoin. So what happens when the 400 says to themselves, you know what, my money is getting debased. I need to get into something solid. And the two most solid things are Bitcoin and gold. You know, they're going to, that 400 trillion is going to be chasing, you know, 5 trillion of sound money assets. And there's only one way that's going to get solved. And that 5 trillion is going to multiply in value several times over. So it's stunning what's about to happen, and it's stunning the wealth transfer that's about to occur. And I know that, you know, many gold people are very, very frustrated with how long this has taken. And, you know, and they say, well, you've been wrong. You've been saying this for years, whatever. All right, fine. But we're about to be right. I mean, I am incredibly confident of that. I mean, just looking at the cards and the way they've been played, there is no doubt we're about to be right. Now, are we about to be right next month? I don't know. This could take a year or two. But it's not going to take that long, because you know, things are moving. As you pointed out, we are in the end game, and things are moving quickly, right? Yeah. So we're about to look really right really soon. And what I would just counsel everybody is to have a nice summer and relax, and, you know, if you've got your allocations in this area, sit back and relax. You're about to be very rich. Yeah. So at least that's my view.
Yeah. So you think we saw GDP, for example, the US debt compared to the GDP is around about 130% in the US. Correct. We see the Fed is printing money like crazy, like never before. I think we just crossed $8 trillion. We see M1 went up like 26% or something last year. They said they will print more this year, 21%.
It's more, it's like 35%, yeah.
35 even, oh my gosh. They say inflation is transitory, which is a joke, and perhaps in 2025 they will increase interest rates. You know, we all know they can't, they won't do it. They will find another excuse why they can't raise rates. So it's just it's a game. They try to buy time actually and keep the people uninformed and keep them in treasuries and everything. So what's your scenario? You think it will happen this decade, and what do you think? How will it play out? How will
I think there's no doubt that it happens this decade. I mean, this is the fourth turning. It started in 08. They're never more than 30 years long, 20 to 30 years long. Yeah. So 20 years takes you to 2028, and you know, maybe it's a little longer, but I'm quite certain it's going to happen within a decade, probably much sooner.
Definitely.
I don't know within the next year or two, but I'm guessing the next move is gold breaks out, and I'm guessing the next move is Bitcoin goes up and goes through 60,000 and starts heading to 100, and more people start realizing, hey, this is an issue. They're out of control, and I don't know what the other side will do. They'll have levers they'll pull, and they'll do jawboning. I mean, they may try to tax Bitcoin or tax gold. I mean, they'll do everything they can to shoot these canaries. I mean, these are the canaries in the coal mine saying there's something wrong monetarily, right? So they'll do things. I mean, they've done it in the past. They've banned short selling. I mean, it's, look, we're playing for all the marbles here, right? So people can't be naive and think that this is going to be an easy battle. It hasn't been easy so far. It's not going to be easy going forward, but they're trapped. I mean, they're completely trapped, and we know we're going to win. We just don't know on what time scale. So, eventually what I think will happen is at some point then, okay, so gold breaks out, inflation's persistent, they back off and say, yeah, we realize there really is inflation, but that's okay. We're going to let it keep going for a while, and we're going to maybe start to increase, interest rates. Maybe they really will raise interest rates a little bit and they'll still be way behind the curve. I mean, in the 70s, interest rates were going up, but inflation was going up faster. So that could happen. My gut, though, is what the biggest thing that's going to happen is that the bond market's going to say, this isn't working for me. 10 years at 1.43 or whatever it is today, that's no good. I can't, I'm out of here, right? And so bonds are going to start to sell off. And stocks may hang in there just because they do represent a claim on a business that'll have value when it reprices. But bonds are going to sell off, and then the Fed's going to say, okay, well, we can't have rates go up that much. We're going to start buying those bonds, which makes their balance sheet even bigger. I mean, just to give you an order of magnitude, some friends and I have mathed it out. And we think the Fed balance sheet will hit $100 trillion this in the next 5 years. Okay, it's at 8 right now. Wow. I mean, it's going to get nutty. I mean, this stuff is going to get nutty. I mean, and we're all going to be multi-millionaires, even with small gold and silver investments today. The problem is gasoline's going to be, well, in Germany, it probably already is $10 a gallon, but here it's going to be $10 or $15 a gallon. And, steak is going to be $100 a kilo. I mean, it's, all these prices are going to move, very, very rapidly higher. And so the key is to be in what's going to relatively hold its value, which is gold and silver. But, and it's impossible, by the way, to know exactly what every move and counter move will be. But history shows that, in one of these events, if you're on the right side of it, you're going to do fine. How fine, we don't know. Will there be ups and downs? Absolutely. And you want to be careful to not, buy the rip. I mean, I have some new investors who, for example, joined my fund last August, right? I mean, last August, we were all having a lot of fun, right? Yeah. I mean, things were ripping. Gold was ripping, 2050 on gold. I mean, we took out the all-time high. All my stock, I mean, my fund was up 126% last year, right? And in August, everybody and their brother came piling in. Oh my God, I got to get in this. I got to get in. Well, and they haven't made any money since then. I haven't lost much either. I mean, down 5 or 10%, but they're just kind of hanging around, and they're kind of like, well, what's going on? Why isn't this working? Well, because these things, I mean, you're talking about a huge change in the monetary system, and it doesn't things don't turn on a dime. I mean, this is an ocean liner or a battleship, and it takes time to turn one of these things. So, it's going to be several years, and I think it all kind of gets climatic and concludes by maybe 2025, 2026. And I think they will do what they should be doing right now, which is saying we're going to restructure, reduce the debt, and reprice everything in gold terms and go back to a gold standard. to me, that's the intelligent, prudent, fair way to reset the system. The system's broken. It needs to be reset. The error that broke the system was we got involved in fiat and we believed Keynes, and we believed in this whole Keynesian thing, and we could just keep making the numbers bigger with debt. And that's wrong. It's just proven to be wrong. It's abundantly clear. The sad thing is that no politician today, even if some of them know it, and I think very few do, no politician today has the guts or really even the backing to do it. It's going to take a total collapse before, and then everyone's going to say, oh, I get it. Those guys printed money. That's not going to work. There'll be a very brief period where it'll be really useful to have silver coins because people won't be accepting paper money. And then hopefully some new politician will come in and say, you know what, the mistake we made was we abandoned what's written in the Constitution, that only silver and gold are money. And we're going to go back to having silver and gold as money. And of course, in the old money terms, they're going to be enormously higher price-wise, but, things will get repaired. I mean, I've read all the histories, and I mean, all of your, I don't know, your listeners, the ages of your listeners, how much they vary. I mean, there are probably very few that were actually alive in the 21 to 23 period in Germany, but I'm sure there are plenty of your listeners who had grandparents who were alive in that period, and it was a disaster. And yet, if you read about it very carefully, they actually, when they went back to backing the currency with land, and then ultimately with gold, it became, things can get repaired very quickly. I mean, if we don't get into a shooting war and we don't start doing really stupid things like going to communism or socialism, if we were to go back to a sound money system, we could reset this. Now, there would be winners and losers. People who own debt in the old system would obviously lose. People who own sound money would obviously win. But, it's not as if we're going to destroy the factories and we're going to kill people, and that doesn't have to happen. All we're talking about is a monetary reset. And it's inevitable. I mean, it's absolutely inevitable because of the math. I mean, if you go to my Twitter feed, the top of my Twitter feed, my pinned tweet just kind of shows the growth in debt compared to the growth in GDP. And, I mean, anyone can do this math very simply. You compound one number at a much higher rate than the other number, and eventually, it's the GDP that supports the debt. Eventually, it just doesn't work. The debt goes parabolic and the GDP can't support it, and so the debt collapses. And, this has been going on for a long time. I mean, we've had many, many debt collapses over the millennium. Sure. And the problem is that the last one for the world really kind of occurred in the 1900 to 1940 time frame, as a result of the creation of the Federal Reserve and World War I and World War II and all the sovereign debt that got created. And so, that collapse led to the Great Depression. And then, of course, Bernanke went to Harvard and MIT and learned the wrong lesson and said, well, the Great Depression occurred because we didn't print enough money. Whereas, the right lesson is the Austrian lesson, which is the Great Depression occurred because, the Fed was so goddamn loose that they let a bubble form in 1929. And that's exactly what they're doing again. I mean, the nature of the bubble in the stock market right now, I'm just writing my quarterly report. It's stunning. I mean, it is absolutely stunning. And I don't know how much you folks see it in Germany, but we certainly see it in the United States. I mean, the things that are happening here are just crazy. I mean, Dogecoin, GameStop, SPACs. I mean, there's so much money flowing around and chasing silly ideas that I was around in 2000. I was in the .com investing area. I bought a lot of internet companies in 93 and 4 when they were private. And of course, I was trying to sell everything that wasn't nailed down in 2000. And I looked at my partner at that time and I said, are we the only two men in the world who still believe that a company is worth its future cash flows? Yeah. Because none of this looks anything like that, right? And so, I mean, you could see it coming, and to me, that's
burn rate. Remember that the burn rate was crazy.
Yeah. Oh yeah. No, it was nuts. Or eyeballs or click throughs or whatever. Yeah, no, they had all kinds of new metrics that Mary Meeker and Henry Blodgett were saying, exactly. Justified these valuations, even though.
But we have the same right now. Look at the Nasdaq. Look at the valuation of some companies. They are crazy, mind blowing, and it's actually a proof that we are at the end of a speculation cycle. It's my opinion. And if you see how cheap money is, and you see the valuations of some companies, it's crazy. All the parameters, all the indices show you that we are more expensive than in 2000, 2007, or 2008. 2008, Shiller ratio, Warren Buffett indicator, Q factor, everything. You know, the margin debts. The margin debts are crazy. I think like 900 billion so far.
Yeah, no, we're up against the red line in absolutely every area. And Mark, as you know, the difficulty with these bubbles is they can go a long way and then they can double again. I mean, it's funny because in the dot-com area in 1998, if you recall, the summer of 98, the LTCM blew up and the Russian crisis occurred. And that thing had gone a long way. And I thought to myself, you know what, this bubble's over. I mean, these dot-com things are no, it was just getting started.
Exactly.
And so that's why, you know, you never say never in terms of timing. And I know some people, I mean, in fact, I think you had him on your show, is an excellent analyst, David Hunter. He thinks we're going to go up another 50% from here.
Melt up. We see a melt up, of course.
Yeah. And he could be right. I mean, he could be right. I personally don't share his view on that. I think we're pretty close to the end game. I mean, you know, from my experience, you know, I'm 64 and I've been investing since I got out of college. From my experience, this reminds me very much of March of 2000.
Wow.
I mean, I think it's just about done
to happen.
I think we're just about done.
All right.
But that's just a gut feeling. And Hunter could be right. I mean, we could melt up from here. I mean, one thing's for sure, you know, look at what's going on in Washington, D.C. They've got their foot to the pedal. Right. I mean, you know, the amount of money they've spent, the stimulus, I mean,
crazy.
It's crazy. And they're listening to Stephanie Kelton, who's modern monetary theory. I mean, this is all.
It's happening. It's happening. It's a solution. But, you know, we have to agree, you know, everybody thought after 2008 and after we saw that the Fed printed more money than ever before, everybody thought, every Austrian, of course, okay, they print more money, we will see inflation. And we were wrong. We were wrong. Actually, we saw the opposite. We saw deflation. We saw deflation. And everybody came out and said, hey, you guys, we are wrong. There is no inflation. And this time is different. And now Stephanie Kelton comes out and says, hey, guys, you were wrong in 2008. You will be wrong again in 2021 or 2022. We can print money out of thin air. We can create prosperity. We can print the Dow Jones to 50, 60,000 and nothing happens because we can print it. Perhaps they're right, perhaps we're wrong. So where are we right now? What's your opinion?
No. They're going to be wrong. This isn't 2008. What they were able to do was to start another credit cycle at a higher level. So the dot-com credit cycle, you know, the dot-com bubble was focused on internet, fine, and technology. The housing bubble was focused on the biggest asset that everyone owns, housing market. Now they're doing it at the sovereign level. Okay, it's the exact same model. And unless they intend to do it at the intergalactic level, I don't know. I mean, what's the higher level? There isn't one. Okay,
everything bubble. Everything bubble.
We're in an everything bubble, and they don't have another level to go to. So they can't restart it. So Kelton's full of shit. I mean, it's just it's not going to happen.
I agree.
The other thing that's going on, the reason they had a lot of good ways that they tamped down inflation last time around. They did Operation Twist, which fooled the bond market, you know, by taking the long rates down. I mean, basically in 2011, I remember it very clearly. In 2011, inflation was breaking out. Okay, gasoline here was $5. Food prices were going up. They had a real problem, and they knew it. And gold was at 1,900. I mean, they knew they were in trouble. And so they did an operation, and they basically put Operation Twist in, where they took long rates down to fool people into thinking that inflation was lower, and they attacked the gold market with paper gold in a very, very big way. They had, you know, I remember it very clearly. They all went down to the White House. They had a conference about it. They came out of that. Goldman said short gold, and you know, then some volumes in the gold market went through that have never been done before. The kinds of things that only could have been done by central banks. Yeah. And so they basically, you know, rigged the market and bought themselves a lot more time while they, you know, pushed money into everything else and let the economy recover. And, you know, they may try something similar again. I don't know what they have in their playbook. I mean, they're pretty evil people. So I'm sure they have some ideas as to how they're gonna counter this one. Yeah. But my belief is that we're gonna overwhelm them. Yeah. But go ahead.
They won't give up the fight, you know, that's for sure. They try to keep this fiat scam on, definitely, and we have to pay for it, but they hate gold, they hate Bitcoin, they hate sound money. They want to have the privilege to print money out of thin air and have the opportunity to give us slavery. But let's have a look at gold, for example. They manipulate gold, definitely, we all know that. But what do you think? Is there any possibility that gold can lose in the 2020s? Is there, for example, perhaps there will be a deflationary shock or deflationary bust? What do you think? Will we see a deflationary bust like in 2000?
Yeah, that's a great question. I've thought about it a lot. I mean, so what do you want to hold in deflation, right? I mean, deflation implies prices. Yeah, exactly. Cash. What is gold? Gold is cash. It's
Real
cash that can't be. It's cash that can't be printed.
Yeah.
So in the 30s, gold purchasing. Of course, they grabbed it from everybody and then they revalued it. But the point is, gold will do extremely well in deflation because it has no counterparty risk and it can't go bankrupt.
Yeah.
And so on a relative basis, if the price of gold stays flat and the price of everything else falls, well, then gold has increased your purchasing power. So I don't see how gold doesn't work even in a deflationary outcome. And yet I also realize that in a deflationary outcome, the price, I mean, a deflationary outcome is going to be an unmitigated disaster. It's going to make the Great Depression look like a walk in the park. And I don't think they're going to do that. I think that if we have that, then, I mean, and maybe we go from right there to a gold standard, who knows? But I think that if things are collapsing, they will increase the printing. They'll run the printer harder. And because that's all they really know. And that's always been their pattern. So I suspect that look, we should have deflation. I mean, technology is becoming more efficient. I mean, there's some great folks who've done a lot of work on this, and there are reasons. And by the way, that's the other thing. I find it hysterical that the Fed thinks deflation is a bad thing. Deflation is a great thing. Yeah. Deflation that we had from the founding of the United States all the way until the early 1900s. And were there some financial ups and downs? Of course there were, but they got solved very quickly. I mean, deflation means your money buys more, and it rewards savers. It rewards productivity. Inflation is theft. Inflation is the other side, of it. I mean, the whole notion, that the Fed sits there and says, well, we don't have enough inflation. Oh, you mean we're not stealing enough from poor people by raising their prices? Gee, that's real nice of you. So I don't worry about a deflationary outcome. One, because I know that even if we had one, I think gold would perform well. But secondly, I don't worry about it because I don't think that the people in control of the situation want to go there, because they know that that's going to lead to widespread bankruptcy, misery, etc. I mean, unless they have some great plan to take over the whole world. And I know there are a lot of people who think this is all part of some master plan to enslave us all. And, it could be, but honestly, I don't have that big a tinfoil hat. I think it's actually just a bunch of stupid people believing their own bullshit. I think you got a bunch of academics, I heard from a friend that Jay Powell won some award from all the Princeton alumni for being the greatest Princeton alumni in the past year in terms of, helping the world. That he had done more to help the world than anybody else in the last year, following the COVID crisis. I thought to myself, what are these folks thinking? I mean, they believe their own bullshit. They just
what are they smoking? That's the question.
Yeah, they just completely believe their own bullshit. And I suppose if your goal is to keep the system going, then you would come to that conclusion, because he has kept the system going. Yeah. What they fail to consider are, what is always wrong with so many economists, they just don't consider the externalities. That yes, okay, the system is still going, but the people at the low end of the spectrum can't afford food.
They lose,
because food costs have gone up a lot, and that literally everybody is getting squeezed, in terms of inflation. And if you've got a 9-figure net worth like Jay Powell, you don't notice the fact that your grocery bill is doubled or tripled.
Exactly.
But the rest of us do.
Yeah.
The rest of us do, and we care. Yeah. And so we're paying for their, policy mistakes over and over and over again. It's been going on for years and years. And that's why sound money is such an important thing.
Exactly. And so how can the viewers protect themselves? What to do? Because we all know they will print more money. With the next crisis, they will do a bailout again. We have to pay for it. They will take taxpayers' money and do stupid stuff, fiscal packages, MMT checks and everything, all the stupidity at once. And how can people protect their purchasing power, their wealth against this insanity?
Yeah, so I'm not legally allowed to give investment advice. So this isn't investment advice. But I'll tell you what I'm doing. Okay.
Exactly.
I've got a lot of silver.
We're just chatting. We're just talking. It's no advice. Exactly. We're just talking.
I've got a lot of silver coins, a lot. And
cool.
And whenever I get any more, excess money, I think, I'll just buy a few more silver coins. So I think silver coins are great. And I've got a lot of gold coins too. Those are great too. And I got a lot of Bitcoin because I think Bitcoin's a really interesting bet, right? I mean, it's not only
Sure.
a form of sound money or an emerging form of sound money. And I know hardcore gold people say it's not, but
May I interrupt you and ask you one question about Bitcoin? What do you
yeah.
think? Will Bitcoin in the future, will it be a currency? Will it fix the world as well, or will we see just a gold standard?
Yeah, I love the statement. Whenever anything goes wrong, Bitcoin fixes this, right?
Exactly.
I mean, it kind of does. Yeah. So my view is that Bitcoin has a very big role to play in the future. It's very important. I'm not. I went to the Bitcoin conference in Miami. I have a lot of respect for the intelligence of Michael Saylor. I'm not in the same camp that he's in, that Bitcoin's going to instantly demonetize gold. I think over time, Bitcoin will eat into gold's market share, and I could see maybe 25 years from now when maybe it is considered digital gold, and gold has less of a role to play. But it's a much longer time scale than all the Bitcoin, hornets think. Having said that, it does have some superior characteristics to gold. I mean, it's pretty hard to move $1 billion of gold with a keystroke. And it's pretty hard to store $1 billion of gold without paying a lot of money in storage fees. And so forth. But I think Bitcoin has a role to play. Will it be the currency? It's going to take quite some time before it becomes a currency because of its volatility. To me, what Bitcoin is right now, Bitcoin's a very interesting store of value asset. It has a store of value. It has a store of value advantage because it's limited in supply. Yeah. I mean, one thing I always used to think, well, gold is so superior to everything, and Bitcoin runs second. Well, it's interesting. I mean, gold is being mined at a rate of about 1.7% a year. We will double the amount of gold in the world in something in the low 40 years. So 40 years from now, there'll be twice as much gold in the world. In 40 years from now, there'll still only be 21 million Bitcoin.
Exactly.
So it's a deflationary asset.
Yeah. So
if you're looking at store of value, and if you think store of value generally goes to the thing which has the lowest stock to flow, Bitcoin's going to have the lowest stock to flow ratio of any asset in the world. Yeah. Okay. And also, Bitcoin is so Bitcoin's got two interesting things going on in my view. One, it's a store of value asset, but two, you've got this adoption curve going on, right? You got 6 billion people. Maybe you got 150 million, maybe 200 million that have some Bitcoin or that are playing around with Bitcoin. And yet that 200, that's growing. That's growing at 20 or 30% a year. So what happens when, you have a store of value asset that more and more people are adopting? Well, that's how you get a 200% compound annual rate of return, which is what Bitcoin has had since its inception, right? So it's pretty damn interesting. I mean, is it so interesting that I would go to Michael Saylor's view and say, oh, you should lever everything you've got and put it in Bitcoin? No, I think that's a hugely irresponsible statement because it's so damn volatile that if you can't carry that debt and you get blown out of it, you're going to really be in trouble. But I've often said that my belief, and I say this sincerely to all gold holders, is don't be butthurt that Bitcoin has beaten you, okay? Look at it for what it really is and ask yourself, maybe I should join them.
Exactly.
Not in a big way. I mean, I think the only wrong Bitcoin allocation is zero, right?
Exactly.
The only wrong. So some people have 100%. I know people like that. They used to be gold bugs. Some people have 50%. In my fund, just to give you an example, we're a little under 20% Bitcoin. Yeah. And that feels right to me. I mean,
definitely diversified.
Yeah, we're diversified. Gold's been around a lot longer. It's a lot less volatile. I know it's going to be here, et cetera, et cetera. But Bitcoin is a very interesting technology that's worked quite well, and adoption is going to drive its growth. And there's a limited supply. Mm-hmm. So, because of that volatility, though, it's not going to function very well as a currency. I mean, you'd have to be nuts to borrow in Bitcoin terms because the thing could go up 100%, and the amount that you borrowed, in kind of fiat would double, so to speak. So it's going to take quite some time before it becomes anything like the base money. Yeah. But it's a very interesting store of value asset, in my opinion.
To have it.
And it really is arguably close to being kind of a digital form of gold.
It is.
Yeah. And now, what are the potential problems with it? Well, one problem is if, the network blows up or the technology blows up, and that's always a risk. I mean, and it requires electricity to keep going. And then people say, well, the world's going to go dark and no one's going to care about Bitcoin. Okay, fine. I don't think that's really going to happen, but that's a risk. I'd say the other risk is that the governments are going to try to attack it. But if you think it through, I don't think they're going to be very successful in those attacks. They're going to try and ban it. China's done it, but people in China are still using it.
Yeah.
it's possible that the US will try and attack it, or others will try to attack it. But honestly, there was a time when they probably could have done that and pulled it off, 5 years ago.
It's over.
It's over. It's kind of out of the bag.
Yeah.
I mean, how's the US going to justify? I mean, they're even saying they're going to develop their own digital currency. So
exactly.
So my way of seeing it, they've already accepted it's going to exist.
Yeah, exactly.
So,
okay.
So now the question, yeah, go ahead. Yeah.
So this is so you said gold coins, silver coins, Bitcoins. What else do you recommend?
Well, obviously I traffic in gold and silver stocks, right? So I mean, the problem with gold and silver coins is that obviously they don't grow; they just sit there. And if you're an equity investor, if you're looking for growth over and above the underlying growth in the monetary unit of gold or silver, the stocks are just silly cheap. And it's really amazing to me, as we talked earlier. Look at how all these, Case-Shiller ratios, everything's just pegged to the top. And the valuations are just sky high in all the traditional financial assets, the FANGs, et cetera. If you look at gold and silver, it's just the opposite. And gold and silver miners, it's just the opposite. I mean, I have companies in my portfolio that are trading at 3 times cash flow. I have companies in my portfolio that have 40% profit margins. I mean, the gold stocks are just a compelling opportunity.
Any picks?
Yeah, I mean, look, you can join my fund, and then I'll tell you what I'm doing.
Is it possible for Europeans, for Germans to buy?
Yeah.
Yeah.
Yeah. Oh yeah. I have foreign investors. I have German investors. Absolutely.
Cool. I know you like Endeavor. I know you like Kinross, for example.
Yeah, I like Endeavor. I like Kinross. I've been buying Gold recently.
Yeah.
I've got a little spec company called Arcana that's about to start producing that I think has got a lot of upside. I've got a lot of silver names. For conservative people who aren't watching it every day, I mean, I think, a Silver Wheaton is a pretty good bet. Sure. It's a streaming company. Yeah. Streaming companies don't have quite as much upside, but they're a lot safer than some of the miners. I mean, one thing I will say about the mining business, it's a tough business. And it actually really does reward stock picking and getting to know which ones are good and which ones are bad. I mean, if we're right about the gold price, they're all going to go up. Okay. I mean, so, if the gold price goes to 2,700, which is kind of what I think it will in the next run, I think most of the stocks I think the indices, I mean, even Barrick and Newmont, the 2 biggest companies in the world, will probably double.
Yeah, definitely. So what is it?
But I think I've got companies that'll go up 5x or 6x, So.
I guess so, because they always go much higher than the underlying.
They're smaller and they're cheaper and they haven't been discovered yet. I mean, I'm trying to take advantage of every single thing I can. Cool. And I mean, the big companies trade at cash flow multiples of 10 times. I mean, I'm buying companies at cash flow multiples of 3 times. So I get growth in my stock prices when 3 things happen. Gold price goes higher, the multiple expands, or the production grows. And, you look at a Barrick or a Newmont, they're at 5 million ounces. They're having a real hard time growing that production. Yeah. I mean, they have to try and replace what they mined every year. I've got companies that are producing 100,000 ounces this year. Next year, they'll produce 150. The year after that, they'll produce 200. Cool. So if you can get a growing producer, that's the general sweet spot of the gold marketplace.
It is.
I mean, there's another one I've got that I like. It's in what some people consider a risky area, so you got to consider that. But there's a company called Step Gold that operates in Mongolia. It's an emerging producer. I think very good story. I was very much a fan of. Probably my biggest holding, the thing I was the biggest fan of was Rox Gold, but it just got bought by Fortuna. They gave the company away, in my opinion. There's at any given point in time, there are a handful of emerging producers, and I hesitate to give out all the company secrets, but people can do their research. And the other thing is, I occasionally drop hints on Twitter.
I know.
I mean, like as a drill story, I really like BlackRock Silver. As a drill story, I really like Lion One Metals. But those are drill stories, and drill stories have a lot of risk. So keep that in mind. Yeah.
You quoted. You said, I never mess with uranium. Why? I was curious about that.
I think it's a great area. Don't get me wrong. I'm not down on uranium, and I think nuclear is a solution to a lot of the carbon problems we've got.
But you're not invested, aren't you?
No, I'm very bullish on that. I got to tell you, Mark, it is all I can do to stay smart on the stuff I'm in. And so, if I had a bigger fund and some employees and some other, I'd say, okay, hey, let's go look at uranium, because I know it's a good area. I know it's a great area.
Okay.
But I'm like, I gotta, I can only do so many things in one day, and there are a couple hundred gold and silver stocks, and I gotta stay smart on those. So.
Okay, so what do you think? The series you're part of is called Commodity Supercycle. Do you think we are in a commodity supercycle?
Oh, very much so. Very much so. Yeah. So we've had this deflationary impulse from 1980 to 2020. I think it just ended. The guy on Twitter to follow for that, who has a lot of good charts, I'm sure you follow him, is Tavi Costa.
Sure. He was on the show as well. He will come again, and he's
he's brilliant, and he does great work on that. And yeah, I mean, I think these cycles run until they end, and I think this one has pretty much ended. I mean, we've had an enormous deflation. Interest rates are pegged at zero. Debt is very, very high, and you're seeing money velocity is very low, but about to increase. And I think we've just started another inflationary cycle. And so, I mean, I don't know if this one runs 10 years, 20 years, 40 years. I mean, who knows? But I know that it feels to me like we hit the bottom of the commodity cycle. And I mean, if you go look at all those commodity charts, in fact, I just in the quarterly report I'm writing, I have one in there. I mean, commodities have just, I mean, I think the last time this many commodities went up 50% in this short a period of time was over 50 years ago.
Yeah, true story.
So that was in the early 70s. When we really had commodity inflation. And I remember that period of time pretty well. I was a teenager, at the time. And I mean, the inflation was just unbelievable. I mean, it was,
so what do you
buy a car and sell it for more 2 years later?
Exactly. Yeah.
It was great.
So what do you think, if we're in a commodity super cycle, what's your price target for gold and silver end of this decade?
Boy, I kind of think infinite, because I think fiat's going to fail. So, in dollar terms, I really do. I mean, I think
same here. Look, same here.
Yeah, I think we hit
in Satoshi. Please.
yeah, right. We'll be through $2,000 on gold sometime in the next 6 months. I strongly believe that. Okay.
Same here.
Then we'll be aiming for 3. Then from 3 we'll probably correct back to 2. Then the next wave will probably take us to 5.
Yeah.
I mean, I can see the system holding together until we get to $10,000 gold. At which point in time, at that point, I could see, I mean, so here's what's going to happen. I mean, we talked earlier about how it's going to happen. At some point, Gresham's law is going to kick in.
Oh, okay.
So you're going to have hyper gold or hyper Bitcoinization, right? So I mean, at some point, literally everybody's going to have gotten the joke and go, holy shit, these dollars are going away. I mean, I know that, and everybody's going to literally get paid and use whatever, any money they get their hands on, they're going to use it to buy gold, silver, or Bitcoin. And at that point in time, the price, they're just going to go straight up.
Yeah.
And the currency is going to fail. Nobody's going to want dollars.
Exactly.
People are going to say, pay me in silver, pay me in gold, pay me in Bitcoin, but I sure don't want these dollars. And that's kind of the end point of Gresham's law. And if you do the Deutschmark from 21 to 23, you can kind of see it.
Yeah.
You get these bumps, and then eventually it gets pretty steep, and then it just goes off the chart.
Yeah.
And that's really currency failure. And it happened in Venezuela. It happened in Zimbabwe. I mean, you can see this. I mean, there have been over 100 hyperinflations in the last 300 years. So there are plenty of examples of this. And that inflection point occurs. I've studied a lot. I've read many, many books on the subject. That inflection point occurs when a tipping point of the average man realizes, holy shit, this is never going to stop. They're going to print forever.
Yeah.
This thing I'm holding is becoming worthless. I got to get out of here.
Yeah.
I got to buy something else. You just paid me $1,000. I got to buy something else because I know that's going to be worth less. Yeah. And then it's all over. At that point in time, it's all over. And that's Gresham's law. It's the bad money, the old dollars, or euros, is pushed out by the good, which is the sound money alternative, gold, silver.
Definitely.
So,
definitely.
That's coming now. We just don't know when and what the slope will be, but it's coming. There's no doubt it's coming.
It's a natural law. It's math, so it will happen.
Yeah,
it's a question it's a question when.
Yeah, it really is. And so, the thing that's very encouraging to me, I think a lot of people in this area, they think we're tinfoil hat and they think we're gloomy, they think we're negative, and we're not. I'm a huge optimist. I'm a very large bull on the condition of of human beings. I mean, we've made it this far, and we're going to make it for many thousands more years. We're going to solve the global warming. We're going to solve a lot of these problems over time. And I went to this Bitcoin conference and I got so excited because I saw a bunch of young people really excited with a vision of what could happen to the world when we get back to sound money.
Exactly.
And it's incredible. It's a beautiful thing. And so, I'm not going to let myself get depressed when I wake up at an 8:20 US East Coast time the gold price goes down 20 bucks for absolutely no reason because the Fed desk just showed up and decided to bomb it. I mean, I'm just like, oh, really, you guys, you're going to do that again? Give me a break. I mean, you guys are, you're doomed. You're just absolutely doomed. They are playing a losing hand.
Yeah.
I mean, we just won. I mean, this COVID thing and what happened, we just won. And so will we have setbacks? Of course we'll have setbacks, but we just won. And so, my view is let's get on with it. Let's try and make it happen sooner rather than later. And the reason I'm on Twitter, the reason I make so much noise is I want to try and educate and help as many people as possible to protect themselves so that they can have, so that they and theirs will do well. And then the other thing that'll be really good, Mark, in my estimation, is if sound money wins, the sound money people are going to be very rich. And if the sound money people are very rich, we're going to be in a position to influence the political system to return it to sound money, right? Because the fiat money people, they're all going to be broke. And they're not going to be able to do that. And so, and the people, I can assure you that a lot of the Bitcoiners, they totally understand this. And they're going to work like crazy to make a better world. And that's a good thing.
Yeah, that's my intention as well with this channel, with my books, with everything. So to educate the people. Yeah. So I would like to have some rapid fire questions for you.
Yeah, go ahead.
Yeah, Bitcoin or gold?
Well, I'll confess. In the end, I think Bitcoin's going to win.
Yeah,
I think Bitcoin does win. Okay,
cool.
But
are you honest? I like that.
Yeah, I do. But one thing to keep in mind on that, it's an interesting point. Everyone thinks, well, okay, yeah, Bitcoin's technologically better, therefore it's going to beat gold. Okay, yes, there is some of that. One thing to remember: all the money is held by the boomers. Okay, if you look at wealth distribution today, it's all in the boomer.
Yeah.
Right. Boomers aren't going to buy Bitcoin. Some are. I am. But I'm unusual. The average boomer, when they realize there's inflation, they're going to buy gold.
Okay.
Right?
Yeah, definitely.
So there's a place for both, and there's a transition period going. But if you force me to pick one or the other, I'd pick Bitcoin.
Okay, cool. So what do you think? What will be the best commodity in this decade?
Best commodity, gold, no doubt. Absolutely.
Okay.
Better than oil. I mean, oil. There's a supply response with oil.
Sure.
There's no supply. The supply response with gold and silver is small.
Okay. Will be fiat currency still available in 2030?
No, it'll be gone.
Okay.
It'll be completely. I mean, yes, there'll be a new one, but it won't be fiat. There'll be a new dollar, a new euro, a new something or other that will actually have a sound backing by the government who's decided to back.
But no fiat currency. Currency.
There will not be fiat currency. Every paper currency will ultimately be exchangeable for a commodity.
All right.
It's called silver or gold. Yeah.
Okay. Beer or wine?
I haven't drank for 30 years. So
okay.
Yeah. In my 30s, I stopped drinking.
All right. Okay,
I like both at the time. Actually, back then, I probably like Scotch the most.
Oh yeah. I invest in whiskey, so but I don't drink it. I just invested.
Great.
Yeah. So, what was the best book you read in your life so far?
Oh, in my life so far, I don't know, probably the Bible. But set that aside for my best recent books I've read. I think The Fourth Turning is a book everybody has to read to understand what's going on. And I think the Bitcoin Standard is probably the best economics book I've read in the last 10 years.
Cool.
Without a doubt. I mean, in terms of laying out, the first half of the book isn't even about Bitcoin. It's about Austrian economics. And Safe is a genius, in my view.
Okay. Where can find people more about you?
Twitter. So it's just at my name, at Lawrence Lepard, Lepard.
I definitely put it in the show notes.
Yeah,
definitely.
one word. Yeah, just put it in the intro notes. I have a website, EMA2, Edward Mark Alpha, the number 2.com. There's a lot of information on there. All my quarterly newsletters are on there. You can sign up for my newsletter. It's free. I won't spam you. Every quarter, my partner
worth reading. It's definitely worth reading. I have to recommend it.
My partner and I write something where we kind of explain what we think is going on and what we're doing. You can also inquire about my fund. It does have a minimum that's not trivial because of the way the SEC works.
Sure.
The minimum has kind of crept up to $200,000. Sometimes we make exceptions, but we are growing and looking for new investors. We've taken investors from all over the world.
Cool.
And we've been able to beat. I mean, I view my job, or we view I have a partner. We view our job as outperforming the gold stock indices. And we've done that pretty substantially in the past few years. We hope we can continue to do that. We think we can continue to do that. And if this theme works, there's going to be a lot of money made here, and you don't need my fund to make it. I mean, you could buy an index and you're going to do well.
And you give so much advice out for free. It's definitely worth following you and reading your newsletter and everything. Like and your fund is doing well as well. Yeah. You know,
keep in mind, Mark, it's worth what you pay for it. I mean, some people think it's total bullshit. And I get a lot of nasty grams on Twitter. One thing I will say on Twitter, if you're on Twitter, you know, I don't expect adulation. I don't care. You know, that doesn't matter at all. But if you want to argue with me on Twitter or give me grief, forget about it. I'll block you instantly. Well, because I sincerely believe it's very important to keep a positive mental attitude.
Exactly. Yeah.
And that positivity is a force multiplier. Yeah. I mean, my big things are positivity, physical exercise to stay in shape, and sound money.
Cool.
And if you want to argue with any three of those, I'm going to block you.
Okay. So awesome. I have a last question for you, Lawrence. It has nothing to do with money, investment, gold, or Bitcoin. It has something to do with something deeper. So what is the meaning of life for you?
So the meaning of life to me is to live up to your God-given potential. I think I believe in a higher power. I believe in a great entity. I believe we were all put here for a purpose. Yeah. And I believe we're all fundamentally the same, and that we want truth and honesty and fairness, and to live our lives in peace. And
true.
So I feel that my role in that whole thing, I'm an analyst. I've always been good at figuring things out and explaining things, understanding things. And I identified the sound money thing as an issue when I was young. It's become more and more of an issue. I now seem to kind of be in the right place at the right time.
Definitely.
So, right. I mean, it's a big issue and about to become the biggest issue.
Yeah.
And so, you know, I think I was placed here by some higher entity to advocate for what I think will make the world a better place. Because, you know, it won't be long and I'll check out, and then, you know, it'll be up to my kids and their kids to solve the problems. And I want to be able to say when I checked out that, you know, I tried to advance. I tried to work toward things that made things better for people.
Yeah. Beautiful.
That my life was not spent. I didn't waste my life, I guess, is what I'm saying, or waste the potential I was given. So
I couldn't agree more. I think the same. I believe in a higher power, and I think there is a fate, a destiny for all of us, and there's a reason why we're together right now here talking about sound money. So I love talking to you. I love chatting to you. We have to do this again. And I knew it. I knew it when I followed you. I knew we are brothers in mind. So
absolutely. There's no doubt. I mean, we could finish each other's sentences. I have the exact same feeling, Mark. So I really. It was an honor to be with you. I really appreciate it. Happy to come back anytime.
Please.
Hope you give me a copy of this so I can put it on my Twitter feed.
Of course.
Get some followers, and I encourage your people. I mean, you know, reach out to me. I try to respond to DMs. I can't respond to all of them, but if you have questions or I can help, that's my mission. I'm trying to help as many as I can. Okay.
Lawrence, take care. Thank you very much for your time, and
likewise.
See you soon.
Okay.
Bye.
Talk to you soon. Bye bye.